Good evening, everyone. My name is Paul Young. I'm just going to walk you through an oil outlook from 2016 and beyond. So a lot of things is happening that we've seen over the last year or so, basically with oil rigs. Oil rigs are a good indication of what's being in terms of production level. And as you can see, as early as 3 years ago, we were basically at 3,400 rigs across the world. We're now about half of that. So you can see that in terms of the rigs themselves in key areas, we have dropped the rig count down. And usually which means is when you start dropping rig counts down, you're starting to drop employment down as well. And we've seen huge impacts of the oil sector in terms of the employment, especially in key areas like Alberta, Newfoundland, as well as in the States areas and the fracking areas, which are the Dakotas, as well as you get into Texas and offshore. So that's impacts in terms of the economy itself, because oil workers in general are paid pretty good money. But what you're also seeing too as well is we're still seeing key areas like when you get into the rest of the world, they've dropped their rig counts down, but not significantly. So OPEC is still pumping oil to offset the drop in production likely that's happened in North America. So because of the cost point that you're seeing, you're actually seeing that OPEC can make money at a lower oil price per barrel versus what's happening in North America. And these are the real facts that you're not hearing from the government in charge right now, which is the Liberal Party, or any sort of government talking about in terms of a strategy for oil. Let's talk about oil pricing. Now this is always a best guesstimate. The idea is as the global economies pick up, there's going to be more demand for oil. We're in a critical phase in economic growth here. We've had a demographic shift in terms of the baby boomers are now moving up and changing their spending patterns. And we now had a group coming up now, as we call the millenniums, that are basically entering the workforce or going into those jobs now that don't have the same disposable income in terms of a percentage to where their predecessors, the baby boomers, were. Also, the cost of living has gone up exponentially as relatively to where we were back in the 80s and 90s. So that being said, these are all going to have bearings on in terms of how things move forward. So it's easy to say that we may see recovery, but it's not likely going to happen until maybe late 2017 and into 2018. So you're now starting to see that we're probably going to go through a couple more years of low oil prices, which is going to put a lot of pressure on governments, and you'll see in the next slide in terms of budget deficits and revenue and just overall how they're going to be able to accommodate where they've got oil as a big percentage of their GDP. This next table, I focused on 4 countries. 2 are in the Middle East, and the 2 in the Middle East, being Saudi Arabia and Iran, are driving things. They're driving OPEC volumes in terms of production. Saudi Arabia's particular case, they're running close to $100 billion budget deficits. And at the pace that they're burning cash, the rumor is they could run out of cash by 2020 if oil prices stay low. Now that's just the worst case scenario. Likely there'll be some rebound, but that's coming into a play where we need to watch that angle, because the Saudis are pretty good in terms of cash management. At one point they used to own a lot of the T-bills in the US, so they could pull some money out of circulation, which could impact the overall global economy in terms of the growth aspects you need to bear in mind. Iran, it's really tough to get a clear budget deficit out of them. I tried to find out, but it looks like about $9 billion US. They're saying they're still going to pump oil. They still say they're not going to have to borrow money in terms of any budget deficit. But when you're talking about a government that doesn't get a lot of information out there, you kind of have to be a little bit skeptical in terms of what Iran is doing. Canada's particular case, we're now seeing $8 billion budget deficits, Canadian dollars, about 6.4 US. Now some of that has to do with the way the Liberal government's come to power and it wants to put more spending into things. But we've seen the impact on the oil sector where foreign direct investment's been curbed down in Alberta. Some of that has to do with the NDP policies, but some of it's just to do to compensate for the capacity issue. Okay, and that's a big play in Canada. US, again, they've got huge budget deficits too as well, and we're seeing oil production scale back in areas like the Balkan areas, which is North Dakota. But the big issue that we're seeing overall in the world, but the US is driving it, is there's no capacity. So whether it's tankers, storage, there's so much oil glut in storage right now, there's nowhere to place it. There's a lot of speculation going on with this oil in terms of tankers moved off site to take advantage of low oil prices, to keep that carrying stock, to take an upside when oil prices go up. So there's a lot of stuff that's going on in behind scenes that people don't see but need to be aware of. I want to bring in the global forecast because this is going to trigger
how things happen from consumer spending to production, where everything that oil is driven from. It's despite how we go to a less carbon-based economy, we're not going to be there tomorrow. We're not going to be there in 4 years. We're still going to have a dependency in carbon. And people can say all they want about solar panels, they can say what they want about wind turbines, but carbon's got a role to play in that manufacturing process, and that's not being disclosed properly as well. Let's talk about the issues that will be facing oil going forward. Agenda 21, that those who aren't familiar, is a pro-agenda push climate change at all costs. When you start doing that, that adds pressure on carbon taxation and pricing. We've seen what's happened with pricing models in Europe. They've been fraught with fraud. We've seen that basically not work to the benefits of reducing emissions. We've seen that happen. We also seen the fact that the more you put taxations through the system, it actually adds cost to people, and that reduces their spending power, and it's consumer spending that drives a lot of the economy, which has never been really discussed about when you talk about governments in terms of Agenda 21. Second thing is, oil is capital intensive, more so in the oil sands and offshore, but it's very capital intensive. So when you make a decision to not invest in capital now in terms of oil production, that's going to delay things down the road when you try to get where the uptick in the oil comes back. So that's the critical aspect too that's not discussed. Real growth in China. Now, despite what people are saying that 6% growth, the real growth could be more close to 2 to 3%. China is a big economy. China drives a lot of things. So if the Chinese economy doesn't pick up, then you're going to have issues in terms of reducing that glut of the oil supply. Now, there's other countries that are coming into play, like India, that are growing at a quicker pace, but can they offset some of the lost production or growth areas in China? That's something that will have to play itself out. OPEC can never get on agreement in terms of production. You got member countries there that dictate production that want that revenue. So how OPEC responds is always critical. They could come to a deal and say that we're going to reduce production, but those deals typically are very difficult to maintain because all it takes is one country to pump oil. So the key aspects here is we're going through a period of uncertainty. To expect that oil prices will go up to $40 or $50 in 2 years, it's probably pretty skeptical. And you may be seeing the later part of 2017 and 2018 before you start seeing an uptick in volume. So this is things you need to bear in mind. And as countries are under pressure for the revenue side, it's going to be very interesting to see how these governments respond when they're seeing that loss in royalty or other revenue streams that come from oil. Thank you.